I want to start by asking you a question that might hurt a little bit. Why are you struggling to make money in the markets? I know you are smart. I know you are dedicated. I know you have watched the videos, read the books, and studied the charts. In your regular life, outside of trading, you are probably a high achiever. You solve problems. You handle stress. You get things done. Yet, the moment you sit in front of a trading terminal, something breaks. The intelligence that serves you so well in the real world seems to vanish, replaced by hesitation, second-guessing, and stupid mistakes. You feel like you are fighting against yourself. I am here to tell you that you are not crazy, and you are not broken. But the strategy you are trying to trade is. There is a dirty secret in this industry that nobody talks about because it doesn't sell courses. The trading strategies that actually make millions of dollars are stupidly, almost insultingly simple. Meanwhile, the strategies that blow accounts, the ones that keep you trapped in the cycle of boom and bust, are the complicated ones. The reason isn't about market mechanics. It isn't about manipulation. The reason is biological. Complex strategies literally break your brain. Imagine for a second that your brain is a laptop. It's a decent laptop, reliable, good for work. Now, imagine opening Photoshop, 50 Google Chrome tabs, a 4K video editor, and a high-end video game all at the same time on that laptop. What happens? The fan starts screaming. The mouse cursor starts lagging. And eventually, the whole thing crashes. It doesn't matter how good the software is if the hardware can't run it. That is exactly what is happening to you when you try to execute a complex trading strategy. You are running out of RAM. This is not a metaphor. This is neuroscience. Your brain has a hard limit on how much information it can process at any one given second. When you exceed that limit, your ability to execute doesn't just get harder, it collapses entirely. Simple strategies win for one reason and one reason only. Your brain can actually operate them when it counts. Let's really dig into what is happening inside your head during a trade, because once you see this, you can't unsee it. A potential setup appears on your chart. In a complex strategy, this is the moment the chaos begins. Your mental checklist starts scrolling. You have to check the relative strength index. You have to check the volume profile. You need to look for fair value gaps. You need to zoom out to the 4-hour chart to check the structure. You need to check the order flow. You need to make sure the time of day is correct. That is 6, 7, maybe 8 different distinct streams of information that your brain needs to evaluate simultaneously. And you have to do this while price is moving. You have to do this while your heart rate is elevated because you know money is on the line. You have to do this while fighting the fear of missing out. Each one of those indicators is a separate mental task competing for the same limited pool of brainpower. Think of it like trying to have 6 different conversations with 6 different people at the exact same time. You might catch a word here, a sentence there, but you aren't really understanding any of them. You are just hearing noise. That is what your brain is doing when you trade complexity. And this is where it gets terrifying. When your brain gets overloaded like this, it doesn't just slow down politely. It starts breaking in very specific, very predictable ways that destroy your bank account. The first thing that breaks is your ability to execute. Let's look at the difference. With a simple strategy, let's say a simple break and retest, the price breaks above resistance with strong volume. You see it. You know what to do. It is binary. Yes or no. Clear signal. You pull the trigger. But with a complex strategy, you freeze. You look at the chart and you ask yourself, did the RSI really show divergence or was that just a small fluctuation? Is this volume spike significant enough or is it just average? Does the higher time frame confirm my bias or is it just neutral? Suddenly, you cannot pull the trigger. Not because you are scared of losing, but because you are not sure if you checked everything correctly. You stare at the setup. You know you should enter. Your gut is screaming at you to go. But there is this nagging, heavy feeling that maybe you missed one of your 12 rules. Maybe if you just look one more time, you will be sure. And while you are hesitating, while you are paralyzed by analysis, the candle shoots up. The move happens without you. You sit there, frustrated, watching your profit target get hit while you are sitting in cash. This hesitation is born from cognitive overload. Your brain is juggling so many variables that it cannot commit to a decision. It keeps second-guessing, keeps rechecking, keeps looking for a certainty that will never come. The market is never certain. Complexity tries to create the illusion of certainty, but all it creates is paralysis. And paralysis is execution poison. Now, let's go deeper. Let's talk about what happens when you do force yourself to trade through the confusion. Hesitation starts doing something very sneaky to your rules. It starts a negotiation. Let's say you have a rule in your complex system that says the RSI must be below 30 to buy. Clear enough, right? But now, a great-looking setup forms, but the RSI is sitting at 32. If you had a simple strategy, the answer would be no trade. But your brain is overloaded. It is tired. It wants the dopamine of a trade. So it starts negotiating. It says, well, 32 is pretty close to 30. And if you squint at the chart, it looks like it might tick down. Plus, the volume looks really good. And the moving average is in the right spot. Maybe the RSI rule is more of a guideline than a hard rule just for this one time. Every rule that involves nuance, every rule that involves complex interpretation, creates wiggle room. And when your brain is overloaded and looking for shortcuts, it will absolutely use that wiggle room to justify whatever your emotions want to do. If you want to take the trade, 32 is basically 30. If you are scared to take the trade, 32 is a clear violation. The more rules you have, the more negotiations your brain can have with itself. The more negotiations, the more likely you are to break your discipline. You aren't breaking your rules because you lack discipline. You are breaking your rules because your overloaded brain is desperate to reduce the mental strain, and taking the trade, or skipping the trade, is the fastest way to stop the thinking process. Simple strategies cut through this negotiation completely. Price broke resistance, or it didn't. The candle closed green, or it didn't. There is nothing to discuss. There is no meeting in your head. There is just action. Now, here is something most traders never connect, and it is the missing link in your psychology. All of this complexity creates stress. And I don't mean the good kind of stress, the alertness that keeps you sharp. I mean the bad kind. The chronic, low-level panic of trying to juggle 10 balls in the air while riding a unicycle. The stress of constantly worrying you forgot to check something. The stress of hesitating on every setup. Stress and cognitive load feed each other in a death spiral. The more you have to process, the more stressed you become. The more stressed you become, the worse your brain gets at processing information. It is a feedback loop that spirals fast. Studies on performance under stress show that when people are overwhelmed, they start missing obvious information. They get tunnel vision. They make worse decisions. They default to emotional reactions instead of logical ones. Your complex strategy isn't just asking a lot of your brain. It is actively sabotaging your ability to think clearly. But we are not done yet, because when cognitive load gets really high, something shifts at a biological level. Your brain has two key players in the decision-making process. First, you have the prefrontal cortex. This is the CEO of your brain. It handles logic, planning, impulse control, and rational thinking. This is the part of your brain you need to follow a trading plan. Then, you have the amygdala. This is the ancient lizard part of your brain. It handles fear, excitement, fight or flight, impulse, and reaction. It is fast, it is emotional, and it is terrible at trading. Here is the science. When your brain gets overloaded with too much data, your prefrontal cortex, the logical CEO, starts shutting down. It literally runs out of processing power. It goes offline. Meanwhile, the amygdala, the emotional lizard, stays fully active. In fact, it becomes more active because it perceives the confusion and overload as a threat. So, complex strategies don't just make trading harder, they literally make you more emotional. It is not a willpower thing. It is not a personality flaw. It is biology. You are trying to be disciplined and follow rules using the exact part of your brain that your strategy has just disabled. That is why you know what to do but can't make yourself do it. That is why you stare at the screen screaming at yourself to close the losing trade, but your hand won't click the mouse. Your logic center has left the building. And this is where everything falls apart. Because when your logical brain is offline and your emotional brain is driving the car, you tilt. Tilt isn't about being weak-minded. Tilt is just what happens when your mental load exceeds your capacity to handle it. Think about where you are at this point in a trading session. You are already operating near your cognitive limit just to evaluate the setups. Your brain is strained before you even enter a trade. Then you take a loss. Now, you need to process the emotional impact of losing money. You need to review whether you followed all your rules correctly. You need to wonder if you missed something. You need to evaluate the next setup. You need to stay calm and objective. Your brain does not have the capacity for all of that. Something has to give. And what gives is your discipline. Suddenly, you are revenge trading. You are chasing entries you know you shouldn't. You are skipping your stop loss. You are sizing up too big to make back the loss. Not because you don't know better, but because your brain has exceeded its operating limits and has reverted to pure survival instinct. Let me paint you a picture of how this plays out in real time over a full trading session. Let's look at two traders. Trader A is using a simple 3-rule system. Trader B is using a sophisticated 10-rule system. Trader A sits down. Setup 1 appears. He evaluates it in 10 seconds. It meets the criteria. He executes. His brain is fresh. Setup 2 appears. He evaluates it. It misses one rule. He skips it. Easy. Setup 3 appears. He takes it. He could do this all day. His brain isn't even breathing hard. Now look at Trader B. Setup 1 appears. He spends 3 minutes verifying every condition. He checks the higher time frames. He draws his lines. He checks the indicators. He executes the trade. He already feels a bit of mental fatigue, a little bit of drain. Setup 2 appears. He starts checking, but he is subconsciously tired. He rushes through a couple of the confirmations. He tells himself he checked them, but he really just glanced. By setup 4, Trader B is exhausted. He is barely looking at his conditions anymore. He is just taking the trade because he feels like it's time to trade. This is called decision fatigue. Your brain has a limited supply of high-quality decisions per day. It's like a fuel tank. Complex strategies burn through that fuel in an hour. Simple strategies preserve it. Every time you add a rule to your system, you think you are making your strategy better. You think you are filtering out bad trades. You think you are becoming more professional. You think you are leveling up. But what you are actually doing is making it impossible for your brain to execute. You are not creating a better strategy. You are creating a better excuse for why you can't follow it. Because execution isn't about knowing what to do. Anyone can read a PDF and learn rules. Execution is about being able to do the right thing consistently when you are stressed, uncertain, tired, emotional, or on a 3-trade losing streak. You cannot do that if evaluating a single setup maxes out your cognitive capacity. This is exactly why simple strategies work. When your strategy has 3 clear rules, decision-making is fast. You spot the setup, you evaluate it, you execute. No mental gymnastics. No stress. That clarity creates consistency. You aren't second-guessing because there is nothing to second-guess. Price either did the thing or it didn't. That is a fact, not an interpretation. You take every valid setup because you aren't exhausted. You follow every rule because you aren't overwhelmed. You trust your system because you can actually operate it. And consistency is what creates results. Not perfect predictions. Not complex analysis. Just doing the same simple thing over and over and over again without your brain falling apart. There is no hesitation in simplicity. There is no room for your emotions to negotiate with your rules. There is no mental fatigue after 5 setups. There is no stress from trying to hold 9 variables in your head. Your brain operates comfortably within its limits, which means the part that handles discipline stays online. Let's talk about the timeline of a trader, because this is where the tragedy really happens. Let's look at your future if you stick with complexity versus if you embrace simplicity. Week 1 with a complex strategy. You are excited. You feel like a genius. You are like a scientist in a lab. You are carefully checking every rule. But you are also exhausted after every session. You need a nap after the market closes. You can feel the mental weight of it. Week 2, you start cutting corners. You say things like, "I'll skip this confirmation, it's probably fine." You start taking trades that are good enough rather than perfect. Week 3, you are barely following the rules anymore. You have unconsciously simplified the strategy down to whatever you can actually handle in real time, which means you aren't even trading your strategy at that point. You are just gambling based on vibes. And when you lose, you blame the market. Now, let's look at week 1 with a simple strategy. You are bored. Honestly, you are bored. It feels too easy. You feel like you aren't doing enough work to justify making money. You keep wanting to add more indicators, but you stop yourself. You execute perfectly. Every setup, every rule. Zero strain. Week 2, still kind of bored. Still executing perfectly. You notice something weird. You haven't tilted once. You haven't felt that rush of anger. You haven't revenge traded. You are just trading. Week 3, you are profitable. Not because the strategy is magic. Not because you found the Holy Grail. But because you have executed it consistently enough for whatever edge it has to actually show up in your results. The complex strategy never got that chance. It broke your brain before the edge had time to work. Here is the reality for most of you listening to this right now. You already know enough to be profitable. You don't need another course. You don't need another book. Every concept you understand, every strategy you have learned, is sufficient. More than sufficient. The problem has never been your knowledge. The problem has always been your execution under pressure. And execution collapses when cognitive load is too high. Every extra indicator you add, every additional confirmation you require, every new condition you layer on, you think it is insurance. You think it is protection. But it is actually a barrier. It is a barrier between you and consistent execution. Think about it this way. Your brain has a cognitive budget for each trading session. Let's call it 100 units of energy. Every decision costs units. Every condition you check costs units. Every variable you monitor costs units. A complex strategy might cost 80 units per trade evaluation. You can handle 1, maybe 2 setups before you are cognitively bankrupt. After that, you are trading on fumes, and that is when the mistakes happen. A simple strategy might cost 15 units per trade. You can evaluate 6 or 7 setups before you even start feeling mental fatigue. Who do you think performs better over a month? The trader who is mentally exhausted after 10 minutes, or the trader who is still sharp after 4 hours? It isn't even close. I want to address the ego, because that is the real reason we cling to complexity. We feel like trading is hard work, so the strategy must be hard. We feel like if it's simple, everyone would do it. We want to feel like elite snipers, analyzing data that nobody else can see. Complexity strokes the ego. It makes us feel smart. Simplicity hurts the ego. It makes us feel like we aren't doing anything special. But do you want to be right, or do you want to be rich? Do you want to feel smart, or do you want to make money? The best traders in the world, the ones managing billions, often have strategies that would make you laugh because they are so basic. They are buying breakout highs. They are buying moving average crossovers. They are trading basic support and resistance. Why? Because they know that their edge isn't the entry model. Their edge is their ability to execute that model 10,000 times without making a mistake. They have designed their trading around what their brain can actually handle in real time. They aren't trying to be superhuman. They are being strategically simple. They understand the goal isn't perfect analysis. It is consistent execution. And consistent execution requires mental space. Space to think clearly. Space to process emotions without being overwhelmed. Space to choose the right action instead of the emotionally easy action. So, here is your practical takeaway. Here is what you need to do immediately after this video ends. I want you to perform a complexity audit on your trading plan. Look at your rules. Look at your checklist. And for every single item on that list, I want you to ask a different question. Stop asking, will this make my strategy better? Instead, start asking, will this make execution harder? Every time you look at an indicator, ask yourself, is the mental cost of processing this indicator worth the value it provides? Does this rule create clarity, or does it create ambiguity? If a rule requires you to interpret or feel the market, cut it. If an indicator sometimes says buy and sometimes says sell depending on how you look at it, cut it. Take your current strategy and cut it in half. Then cut that in half. Keep cutting until you have 3 rules maximum. I am serious. 3 rules. Those rules should be simple enough to teach a 10-year-old in 3 minutes. They should be clear enough to execute when you have the flu. They should be straightforward enough that there is 0 room for interpretation. Then, I want you to trade that system. Not for a week. For 3 months minimum. And just watch what happens to your mind. You will feel calmer during trading. You will feel less anxiety when you open the charts. You will tilt way less. And paradoxically, by trying to do less, by trying to capture less, by looking at less, your results will improve. You will realize that the complexity was never your friend. It was the anchor dragging you down. The bottom line is this: complex strategies break your brain before the strategy itself ever gets a chance to fail. They create cognitive overload, which causes hesitation. Hesitation causes rules to become negotiable. Negotiable rules cause stress. Stress causes emotions to override logic. And emotions cause you to lose your money. Simple strategies win because they preserve your brain's ability to execute. That is it. That is the whole secret. Your brain is the limiting factor in your trading. Not the market. Not the news. Not the hedge funds. Your brain's capacity to process information under pressure is the bottleneck. Once you accept that, everything changes. You stop searching for better strategies. You start searching for strategies you can actually operate when it counts. And that is when you finally start making real progress. Stop trying to outsmart the market with complexity. You are only outsmarting yourself. Be simple. Be boring. Be profitable. Simplicity is the ultimate sophistication. Now, clear your charts, clear your mind, and go do the simple work that actually pays.